Let's say the house you're living in just isn't working for you anymore. Maybe it was great when you bought it, but things have changed and for whatever reason, it's just not meeting your needs. Now, my theme is that you should live where you can thrive. And part of thriving is being able to afford comfortably the place you live in. And so the concern in today's market is interest rates. They're now in the 6 to 7% range, and we were spoiled. 6 to 7% is historically pretty normal. But because of where they were a year and a half ago, we think this is awful. And maybe our current mortgage is in that 3% range, and we hate to give that up. Let me explain that there might be two options to minimize the pain and get you in a house that's affordable and meets your needs. The first one would be to get a home equity line of credit. Some banks offer great programs. They're fairly easy, less paperwork, less cost, and less time to originate the line of credit. So do that on your house, your current house, and do that before it's sold and before we go shopping on the new house. What that allows us to do is develop a chunk of money that's available. And maybe in this scenario, your house is worth $300,000 in the market, your current house, and maybe you've got a $100,000 mortgage. And by the way, your current value might be more than you think based on the appreciation we've been seeing in the market. So we get you lined up with the home equity line of credit, and it gets a little geeky, the math gets a little geeky, but we can probably get you, say, $140,000 in this scenario. We don't draw on it, we just have it available. So then we get your new house, we get financing on the new house based on a big down payment, maybe $140,000 or more, and we close on it. Then we get your house for sale, we get you moved, and hopefully in 30 to 60 days we get your house sold. And when we do, we wipe out your first mortgage and we wipe out that home equity line of credit. And now you can move ahead on the new house and pay less interest, less monthly principal and interest payments, lower monthly payments, and hopefully be in a really great place for a long time. So that's one possibility. The other possibility would be to consider a mortgage from a company that will allow you to recast it. Now, a lot of banks may not do that, but there are some that you can go to the bank, and if you have great credit, you've got a good income, you can finance a small down payment on the new house. You proceed and you go buy that new house with the intent to recast the mortgage when your house sells. So again, we get your house sold, we get you moved, and when your house sells, we take the equity, and in this case, maybe up to $200,000 less some closing costs, and we take that money to pay on the principal of the new house. So now we go to the bank, and for a fee, a one-time fee and a one-time recasting, they'll recalculate your mortgage payments based on the much lower principal. And then you're free to move on, hopefully again in a good place for a long time with reasonable monthly payments and interest costs. So I hope you found this helpful. If I can help you in any way, I'll be glad to. I hope we talk soon, and until we do, I hope you go slay some dragons. Thanks for watching.